Today, we'll be discovering together one of the largest Canadian companies that might not be the flashiest on the market, but that has still become, over the last couple of decades, an absolute essential to our lives. In this video, you'll discover a full stock analysis on the Canadian National Railway with the ticker CNR. As always, after checking out what is their business model, so how are they able to generate their income and what are their most recent news that have affected them, I'll be making a quick fundamental analysis followed by price prediction with different valuation models to see what is the true intrinsic value of this company. As its name is saying it, the Canadian National Railway is a Canadian railway company that has been founded in 1990 and that was initially a government-owned business up to its privatization in 1995. Over the years, the CN has been able to grow quite a lot to now become Canada's largest railway companies for both the total revenue as well as the size of the operations, where we can see that its railroad is crossing Canada from west to east, passing by the US on over 20,000 miles across North America. Over the past couple of decades, the company has also been working a lot on increasing its presence in the United States by making important acquisitions. Just to name a few, they've notably acquired the Wisconsin Central, the Chicago Central, as well as their more recent acquisitions of the Iowa Northern Railway at the end of 2023. All of these acquisitions make that per year, the Canadian National Railway is able to transport over 300 million tons of natural resources, manufactured products, and finished goods throughout all of North America. But the CN isn't a simple railroad company that is focused on transporting people and goods from one place to another. It also has some other important business segments, such as the Canada's largest full-load trucking subsidiaries that include more than 1,050 owner-operators, add with a fleet of 8,000 chassis and 8,000 containers. As long as we won't have any types of flying trains or teleportation machine to get different goods from one place to another, it will make that a company like CN will remain a super strong and important company in today's economy. In terms now of the major shareholders of this company, so who are the different people or companies that are holding the largest part of the CN shares? Surprisingly, we can find that the largest shareholders of this company is the Bill and Melinda Gates Foundation. This is pretty surprising to find that this American foundation that is notably fighting against poverty, disease, and inequality around the world is interested in such a company. But in my opinion, it is because one of the world's richest person in the world, Bill Gates, might actually recognize the fact that this type of company is pretty essential to everyone's life. And after, with no surprise, amongst the largest shareholders of this company, we find some of the largest fund companies such as Vanguard. In terms of the CEO and the board of managers of this company, we can find that since 2022, Tracy Robinson has been named and appointed as the new CEO of the company. In my opinion, she was rightfully named so because she notably had some past experience amongst the company's most important executives. So she knew how the different operations were working in this company before to become the president, and at the same time she also had some great experience of over 7 years as the vice president of TransCanada. However, as it is the case for most of the biggest corporations in the world, the CEO and the different executives have allowed themselves to receive some big bonuses over the past couple of years. The only problem that I usually have with bosses and CEO that decide to give themselves some big bonuses is when the company is not able to meet the financial expectations of the different shareholders. In terms of their earnings performance over the past 4 quarters, we can see that they've been able to basically outperform the analyst expectations in 3 times out of 4. But over the past 2 years, unfortunately, we can see that the company's value has been decreasing, which isn't necessarily a good news for the shareholders. At the same time, over the past 5 years, we can see that the company's total value has only been increasing by about 25%, which isn't that much when we compare it with the global stock market that has been totally exploding throughout that same period. But now, to determine whether or not this company at its current valuation could be a great addition to your portfolio, let's examine together what the different financial metrics are telling us about the true intrinsic value of this business. First, in terms of the valuation of this company, we can see that over the past year and a half, it has lost a little bit of its total value, where it is currently worth about $93 billion. However, the good positive point about it is that its price to earnings ratio has been diminishing compared to last year to reach about 17.50 at the moment. And so if we compare this PE ratio with its big competitors in Canada, which is the Canadian Pacific Railway that has a price to earnings ratio of over 20, we could understand that right now the CN would be the best options between both of these companies. But what is truly phenomenal about this business is their incredible profitability, where we can see that both their profit and their operating margin over the past 12 months has been over 30% each. And so this has led to an incredible return on equity over the past 12 months of over 27%. In terms of the total revenue throughout that same period, we can see that the CN has been able to generate some revenue of over $17 billion, where over the past quarter, they've been able to grow their quarterly revenue by over 3% compared to the same period last year. But in terms of their quarterly earnings growth during the same quarter, we can see that they have been slightly diminishing of about 2% compared to the same period in 2023. However, a more distressing point about the CN is the fact that they don't currently have a lot of cash, only about $273 million compared to their gigantic $21 billion debt. This means that they currently have a high debt to equity ratio of over 100%, and at the same time that they are quite dependent on the fluctuation of the interest rate. Then in terms of the volatility of the company, so how much the company will fluctuate throughout time represents by the beta on a 5-year period, we can find that the company will tend to fluctuate quite less than the overall market over the past 5 years, with a beta of only about 0.65. This has been well showed over the last 52 weeks, where the company has lost about 8% of its total value, while the stock market on its side has gained over 27% of valuation. In terms of the dividend from the CN, we can see that they are currently offering a 2.29% dividend to their shareholders paid on a quarterly basis. It is also important to note that their dividend has been growing over the past 24 years in a row, and with a payout ratio of only 39% at the moment, it is showing that the dividend is quite sustainable and eventually might be also re-increased in the next couple of years. Now, to determine what is the true intrinsic value of this company, as always, we'll be using different valuation models to help us with this task. Starting out with the Peter Lynch valuation one, which is a simple formula where you add the future growth of the earnings per share with the dividend yield, and that you divide with the price to earnings ratio. And so even if the price to earnings ratio is quite affordable at the moment, since it isn't predicted that the company will grow their earnings per share a lot over the next 5 years, and since they don't have a huge dividend yield, it makes that the company's value at the moment with this valuation model would be slightly overvalued. In terms of the second model, which is the dividend discounted model, unfortunately, since we can see that our average growth rate is bigger than our weighted average cost of capital, we won't be able to use this model. But in terms of the third model, which is the discounted cash flow model, which consists of discounting all the future free cash flow that are predicted for this company to find the enterprise value. As always, we'll first start by finding what is the cost of debt, the cost of equity, the cost of debt and equity to find our weighted average cost of capital. And so with that, we can find that the company's intrinsic value would be of about $212 per share, meaning that with the current price that they have of $148, this company would be quite undervalued right now. Finally, for the two last models, which are the Graham's original value formula and the Graham's revised value formula, we can find that with both cases, the intrinsic value would be showing that the company would currently be quite undervalued compared to its current price. As you've been able to discover in today's video, the Canadian National Railway is an essential company in terms of the logistics of our economy, as long as we'll need to transport different goods, natural resources, and people from one place to another. This type of company will remain essential to our good economy. However, lately, we've seen that the company has been on a quite negative downtrend where it has lost quite a little bit of its total value over the past couple of months. Nevertheless, we can still see that with its current financial metrics and evaluation models, we can understand that this company would currently be quite undervalued right now. So if you're looking for a company that will remain stable in terms of valuation over a certain period of time that is also giving an excellent growing dividend that has been growing over the past 24 years consecutively, the Canadian National Railway in that particular case might be pretty interesting for you. But now, if you're looking for other great undervalued companies that you can buy right now before the beginning of 2025, well, check out the video. It's going to be right over here, and I will see you soon. Peace.